Welcome to Explain the Charts, where we break down the markets with both news and technical analysis. Today, October 24th, we're diving deep into the NZDUSD, the New Zealand dollar against the US dollar. This pair has been on a roller coaster ride in recent weeks, with the New Zealand dollar experiencing significant volatility against the US dollar. Recent news from the Reserve Bank of New Zealand, RBNZ, has sent shockwaves through the Forex market. The RBNZ has surprised investors by announcing an aggressive interest rate cut, a move that has weakened the New Zealand dollar significantly. On the other side of the equation, the US dollar has been strengthening against most major currencies. This is partly due to the US Federal Reserve, Fed, signaling a more hawkish stance on interest rates. The Fed's outlook suggests that they're less likely to cut rates in the near future, which has boosted the US dollar's appeal. Let's dive into the charts and see what the technicals are telling us. First, we'll take a look at the daily chart for NZDUSD. The daily chart shows a clear bearish trend, with the price making lower highs and lower lows. This trend has been particularly strong over the past few weeks, as we've seen a consistent decline. Notice how the price has broken below several key support levels. These levels, which were previously acting as resistance, are now acting as strong barriers to any potential upside movement. The latest price action has pushed the NZDUSD below a crucial support level around 0.6100, indicating that the bearish pressure is intensifying. This suggests that the downside momentum could continue in the short term. Looking at the hourly chart, we can see that the bearish trend is still in place. However, the price action is showing signs of consolidation around the 0.6050 level. This suggests that the price may be finding some support around this area. It's important to note that this consolidation is happening within the broader bearish trend, so it's too early to say if it's a sign of a reversal. To get a better understanding of the short-term sentiment, we can zoom in on the 15-minute chart. The 15-minute chart shows that the price is bouncing between a resistance level at 0.6060 and a support level at 0.6050. This suggests that the price is moving in a range and trying to find direction. The recent break below the 0.6100 level on the daily chart is a clear indication of bearish momentum. However, the consolidation on the hourly chart and the range-bound activity on the 15-minute chart suggest that the price could be setting up for a potential bounce. If the price manages to break above the resistance level at 0.6060 on the 15-minute chart, it could signal a short-term bullish reversal. However, it's crucial to remember that this potential bounce is happening within a larger bearish trend. If the price fails to break above the resistance level, it could confirm the bearish momentum and we could see further downside pressure. Moving back to the daily chart, it's important to consider some long-term key price levels. A significant resistance level is located at 0.6200, where the price has stalled multiple times in the past. Breaking above this level would be a significant bullish signal and could indicate that the bearish trend is coming to an end. On the other hand, if the price continues to break below the current support level at 0.6050, we could see a further decline towards the 0.6000 level. This level has historical significance and could provide strong support. The likelihood of the price bouncing back from the 0.6050 level in the short term is moderate. This is because the bearish trend is still in place and the news from the RBNZ is still weighing on the New Zealand dollar. However, the consolidation on the hourly chart and the range-bound activity on the 15-minute chart suggest that a bounce is possible. The likelihood of the price breaking above the 0.6200 resistance level in the long term is low. This is because the RBNZ's rate cut has significantly weakened the New Zealand dollar, and it's unclear when or if they will reverse course. The likelihood of the price breaking below the 0.6000 support level in the long term is moderate. This is because the US dollar is expected to remain strong in the coming months, as the Fed is unlikely to cut rates. To reinforce the likelihood of a short-term bounce, we need to see the price break above the resistance level at 0.6060 on the 15-minute chart. Furthermore, we need to see a shift in the news sentiment, with positive news for the New Zealand economy or a more dovish stance from the RBNZ. To reinforce the likelihood of a long-term decline, we need to see the price break below the support level at 0.6050 on the daily chart. Furthermore, we need to see further negative news for the New Zealand economy or a more hawkish stance from the RBNZ. In conclusion, the NZDUSD is currently in a bearish trend, with the price breaking below several key support levels. However, short-term consolidation and range-bound activity suggest a potential bounce. Key price levels to watch are the resistance level at 0.6060 on the 15-minute chart and the support level at 0.6050 on the daily chart. Things to look for include a shift in the news sentiment and the price action breaking above or below these key levels. Remember, this is just an analysis and the markets are unpredictable. Always do your own research and trade responsibly.